I'm the CEO at Wolf Financial, here with Mike from The Money Show and a host, a group of other amazing stock market analysts, people that are constantly publishing research, talking about the markets. It's the kickoff of 2026. The market has had no shortage of interesting movements this year. Trump is doing his whole thing live right now over at the WEF, right? The market is going everywhere, and we are here to talk about it. We're going to put a link in the chat for the upcoming Money Show. So much to talk about here. Let's get right into things. Mike, I'll turn it over to you.
Thank you so much, Gav. Thank you, everybody who's watching this, and thank you to the panel that's going to be joining me. We have a great panel of experts, Money Show speakers who are going to be joining us at an event I'll talk about in just a minute. I really couldn't think of a better group of people to talk about the markets, tell you what's going on, help you navigate all these twists and turns, and essentially get your portfolio ready for what the year 2026 has in store. So I'm going to briefly introduce each panelist here. They'll have a chance to go around the table a little bit later, talk about what they're seeing in the markets and so on. And then again, as Gav mentioned, we'll drop a link to that event registration page that you can use to join us in Vegas. So first off, we've got Jeff Hirsch, editor-in-chief of the Stock Traders Almanac. He's an expert on seasonality, market history, and applying that to current market conditions. So you're going to love hearing from him. We've got Danielle Shea, VP of Options at Simpler Trading. I've been fortunate enough to see Danielle speak and talk to her at many Money Show events over the years. She really is clued into the options market and ways you can profit from things like earnings and other developments there. So you'll be hearing from her and what she's seeing. We've got Carley Garner, senior commodity market strategist and broker at Carley Trading. Again, fortunate enough to interact with her at many Money Show events over the years, talk to her about the commodity markets, what she's seeing, and everything from oil and gold to lesser traded commodities that you may be interested in learning about here. And finally, we have Thor Young, senior futures trader at Peak Capital Trading. Before we came on the air, we also found out he's a suffering Jaguars fan. So let's shed a tear for him. But we're glad that he's going to be here to talk about some of the things he's seeing when it comes to trading the market actively. And of course, we have Gav from Wolf Financial. He's been our partner for this live stream effort, and we've been fortunate enough to work with him on many Money Show events over the years. So thank you for joining. How's everybody doing?
Great.
Super. Okay, I want to dive right in this conversation. Again, there's a lot to talk about, but just briefly talk about the event that you're all going to be joining us at. You're going to be able to learn from each of these panelists at the 2026 Money Show Traders Expo Las Vegas. This event is coming up. It runs February 23rd to 25th at the Paris Las Vegas. And actually this year, if you happen to be in town early, we're hosting 2 pre-show tracks for the first time on Sunday the 22nd. One's going to focus on crypto and digital assets. One's going to be focused on AI and tech stocks, which, of course, nobody owns or cares about if they've been following this market. Just kidding. To find a link, we can get more details, register your pass in the chat, or just remember LasVegasMoneyShow.com. So with that out of the way, let's jump right in. Jeff, Thor thought maybe you jumped in late just so you could get that bottom right corner and have the best seat in the house. I don't know if that was intentional or not, but I'm going to go with you anyway, just because I wanted you to maybe take a minute or two, share what you're seeing big picture in this market, and we'll dive into some details after we go around the table.
Probably just a boomer move. I've been going to the Money Show since 92. I think Vegas, May 92 was my first show with my pop back then. So, just a little technical boomer snafu. Not looking for lower right, but I'll take it. So, it's a midterm election year. A lot of people are spooked by that, but it is the second midterm election year, the 6th year of the presidency, which is more bullish than the, midterm year like we had in 22. You've got a president, which we're seeing live, as you were alluding to earlier, trying to cement his legacy. He's playing the market. He's playing the world stage. I don't know if I'd go Stradivarius, but it's definitely, as you said, interesting times. We also have our January indicators. The Santa Claus rally came in negative, just barely. Dow was positive. This was an indicator that my father invented back in 1972 in one of the old almanacs. First 5 days came in positive. This is one that we've been tracking in there for a while. Quite a lot of people track that as a bullish indicator. Then there's the full month January barometer, which Yale also invented back in 72. This creates our January indicator trifecta when all three hit, which is not going to happen this year because the S&P was down a fraction for Santa Claus. Market's up 90+% of the time, 17.7%. Et cetera, et cetera. 11 months are up too. So we're looking at this January If we can come in positive, January's have been very indicative of the year to come. There's also something called the December low indicator, which is an old something that was put out by his name escapes right. I have to look that up. But that's the market. If it closes below the December closing low, which was December 1st, in the first quarter, that's an indication. We did that in 22 back in February, like the 21st or something. So, we've got a bullish forecast out there for 8 to 12%, based upon the 6th year of the presidency and the decennial cycle and the easy Fed and the economic growth and the AI super boom. And again, just, general market. I mean, we had a couple of pullbacks, but I don't know. We got some technical people in the room here with me. Maybe Carley can look and Danielle can look at that chart. It looks like we're making a couple of higher lows there, at least on the main indices. So a lot of bullish indications, going to be more volatile. But that's what we're looking at. Check it all out. We did a whole forecast on it. But
by
anyway,
the way, Jeff, it's Lucian Hooper was the December low indicator.
It's written in my almanac, sir, and you have a copy of it, and I escaped my memory. Yes. The Prost of Wall Street, I think they call them, right? Something like that, yeah. Wall Street Journal analyst, writer.
Hats off to Gav for the quick research while on the off screen. I love it. Now, Carley, Danielle, I was debating where to go to next, but I think given what I've seen in the precious metals, holy cow, I've got to start with you, Carley. I mean, today is a great example. You're up 100 and some odd bucks, and then you're down into negative territory. And I think last time I checked, you're up 30 bucks or so on gold, but we all know what's happened. Talk to me a little bit about what you're seeing in the commodities market, a little bit about your background, and just how people should approach this kind of wild action.
Sure. So I'm a futures and options broker and analyst. I run a boutique brokerage shop in Vegas, and we've been watching the metals markets pretty closely. As you can imagine, we have a lot of traders. We have traders that a lot of them trade online through mobile apps and trading platforms, and then we also kind of give them advice here and there. And, I've been pretty vocal about the fact that I've been wrong in metals. I did not expect to see what we've seen in gold and silver. So I'll say it, I was wrong. There's a few things going on here. There were a lot of reasons for people to be bullish gold and silver, but I don't think there are any justifiable reasons to be aggressively buying at these prices. It's really, really dangerous. I've been doing this for a long time. I've seen some crazy things. And the one thing I know, and I don't know much at this point, but the one thing I do know is this is not a healthy market. We're seeing swings in gold just today. We've from high to low and back and forth a couple of times. These are moves that I've seen take 7, 8, 9 years to occur, and we're getting them in a handful of minutes and hours. So it's really, really volatile. I'll also just kind of add, I think a lot of it has to do with ETF players and ETFs. I'm not a big fan of ETFs in commodities because what happens is, first of all, there's leveraged ETFs, long and short, and those kind of distort things because every day the ETF has to rebalance. And people think of gold and silver as massive markets, but the reality is gold and silver futures markets, they're very liquid and they are big. But when you're talking about something that gets mainstream attention, like the entire investment community around the globe, trying to force a whole lot of cash into a commodity, it really doesn't work, and they tend to break. We saw this in 2022 when Russia invaded Ukraine. Everybody rushed to buy wheat ETFs, and there was just so much money coming into the market that it couldn't absorb. We saw wheat go limit up for 7 days and explode, and then now we're actually a third of what we were at those highs. So you want to be really, really careful and skeptical when you see markets go parabolic like this. There's a lot of money to be made, but there is a lot of money to be lost. So just proceed with caution. We'll be obviously in Vegas. We'll be talking about that. We'll probably also talk about the energies, which is a popular topic. Natural gas moved more in the last couple of days than it has in years. And so we're getting some really wild things going on in commodities. And to be honest, what I see in the markets doesn't make me feel warm and fuzzy. In fact, it's pretty scary. It's not really normal. In the case of natural gas, that was a weather scare and everybody was caught short and complacent. So those things happen. But there's a lot of really odd, unhealthy things that I see in the market. So I would advise people to proceed with caution because 2026 is starting out to be a really rough ride.
I mean, it's a lot of fun if you're a day trade commodities futures, which I was doing today, and I was all kinds of short on gold today off of the highs. So we caught that drop two
Yeah.
times today, thanks to some clever social media on people we won't talk about. No, but I agree. Like for me, the concept of like trying to swing some of these things, it makes me very happy. I'm a day trader.
Well, Thor, I was going to go to you anyway, since you're obviously active in the futures market and trading on shorter term moves. What are your thoughts on what's going on there, not just in obviously precious metals, but other parts of the futures arena? And what are your best pieces of advice for somebody trying to navigate this?
So the futures market for me in general has been quite distributionary. So when I see buying and we go up, I see low volume. So I'm an old school volume trader, and it's what I pay attention to. I'm not overtly concerned with fundamentals because I think most of the time they're not adhered to. I think where the action at and where the volume is what's important, and especially as a day trader, it's virtually all that's important. I don't ever carry positions overnight. I don't have a 401k. I don't have a long-term portfolio. I do have a couple of boxes of quarters in my safe over there. That's, all pre-60s. So that's pretty good. But that's about it for me. Everything else, I like being liquid and playing the price action while my eyes are open. Especially since I started trading in 2018. So I am pretty used to this, exactly what's going on right now politically. I've been doing it since I started trading. And it's really important. But for futures markets, I see a lot of our upward movement on really low volume. Generically, we waterfall way easier than we move up. So it's a really hard time to trade these. Our after hours movement tends to be better than our intraday movement for day trading. So many of those have gone into indexes now related futures like ES or NQ. And those are so news sensitive right now. It's very dangerous. So I agree with Carley a lot on everything she said there. I think there is a lot of up right now that just doesn't make a lot of sense at all. But if retail specifically wants to buy, they'll let them. You know what I mean? And if they want to come in and keep buying these highs, by God, they'll distribute into them all day. Let them hold those high bags, and then they will sell off and leave you holding it. And these artificial pop, they just pop. And you get these liquidations that are just beautiful. So be really cautious in every market right now when it comes to this kind of stuff. It can get trapped.
Got it. Good to hear it, or good advice. Anyway, Danielle, I know that you operate in the shorter term timeframes, but also have longer term portfolios and investments. So why don't you kind of set the stage like Jeff did earlier with what you're seeing, not just in the here and now, but maybe over the longer term.
Sure. So, I definitely continue to just dollar cost average and relative strength stocks with long-term bullish trends. I like to look for tickers that continually increase their EPS estimates. I also like to look for tickers that you can see that they rally before earnings because people are anticipating those bullish earnings announcements. And then I also like to look for tickers that rally after earnings, of course, too. And so I will invest in those tickers on a long-term basis, but then I also trade them in a short-term basis in the options market. So what I've been seeing right now is it's really interesting because for a long time, I just mainly traded the Mag 7. These tickers are highly optionable. You can use a lot of spreads and butterflies, and that's what I like to do at Simpler Trading in the options room. But the Mag 7 it's been really depressed, except for, of course, Google that looks really good. So I think there's a lot of warning signs right now in the market because the NASDAQ has pulled back. It's consolidating. We have Meta breaking down. I was shorting Meta this week. We have Microsoft breaking down, Netflix breaking down. There are definitely things out there that I'm looking at it and I'm saying, ooh, it does kind of give you those 2022 vibes, Jeff. So I'm a little bit focused on the fact that, if we have earnings come out and it ends up being more bearish than we expect, we might end up getting a lot more volatility and downside in the NASDAQ. But on the flip side of that coin, there are still a lot of tickers out there that are doing really well. These are volatile, aggressive names, which for us at Simpler Trading, these are the kind of names that we trade. So that's the number one criticism I always get from people is they say, what are you doing trading these crazy names? But that's what we do. So for example, like Lemonade was up 9% today. That's one that I just got into. This ticker rallies really well before and after earnings, and it has earnings coming up. It also has high short float. So I'm also focused on a lot of tickers that are heavily shorted. Carvana is another one. This one's heavily shorted. It has earnings coming up. It does typically rally before and after earnings. So I'm kind of looking for some names like that. IREN, CIFR. Some of these are lower price names that are good for long-term portfolios as well. But I'm really just focused on earnings season right here, and I'm getting ready to go to Vegas. I love going to Vegas. I love going to the show, and I'm looking forward to seeing all of you there.
Awesome. Well, I'm
Ditto.
going to yes, I'm going to talk about one quick point you brought up there, but just a reminder, since Danielle mentioned it, the link's in the chat. Money Show Vegas. It's going to be February 23rd to 25th. If you're just joining us now on the stream, we'd love to see you there. You're going to hear from all of these people live and in person, get to ask some of their questions in person, shake hands, have a cocktail, whatever floats your boat in Las Vegas. It's interesting. We're talking about market breadth, and on my screen over here, I pulled up some different, ETF year-to-date figures through the end of the day yesterday. Obviously, bouncing back, or these numbers will change based on what happened today. You've got, was it financials down about 3%? That was kind of ugly. Tech, the XLK was down 1.5%. We had IWM, which of course is small caps, up 6.7%. We've already talked about gold. So, small caps, that rotational action we've seen, is that something that's encouraging? Is that something that, you want to see tech continue to sort of carry the torch here? This is for anybody who wants to weigh in. Do you want to see small caps in other sectors? Are you encouraged by that kind of rotation?
Can I answer that two ways?
Sure.
Well, number one, it's encouraging. You like to see, the broadening out of market participation. I like small caps. I'm in the IWMs, so we're happy with that. We have a bunch of small caps in our picks. But, looking further out, especially if you go into the back pages of the Almanac, which we'll have there in Vegas, and I'll be happy to sign them. Bring your own if you have them, and I'll sign the one you have, or I'll have some there anyway. But, when the small caps start to outperform is sort of getting towards the end of the bull run. It's not, imminent like tomorrow or the next month, but you're starting to see the end of things, the end of the cyclical bull, not the secular bull, which I think is going on for a while. So yeah, it's great for traders and stock pickers and the market to have some broadening and some, deeper participation, but it does start to, indicate that you're getting towards the latter stages of the bull market for whatever that is.
Okay. Gav, I want to ask you, obviously, we've talked for quite some time about markets, and you've got a lot of, your finger on the pulse of sort of the retail trading community and what they're seeing and talking about. What are they saying about this market environment? Obviously, this week's, kind of thrown a loop into a wrench into the works, but I'm just kind of curious.
Well, I've definitely seen more retail investors talking about metals than I've ever seen before in my life. I would say that that's been something that's definitely stood out. We've had regular conversations on gold mining, gold exploration, silver, platinum, copper. That's been huge lately. And I think a lot of people are jumping on that train, which is really interesting because it's not something, if you go back a couple of years ago, there were a couple of, more active traders that were in the spaces, but not a lot of retail investors that were discussing that. In terms of the actual large caps and indices, I think there's a little bit of tension right now. And from a lot of people's thoughts, what I'm garnering from the retail investors is that up until there is a little bit more certainty as to what's going to happen with the Fed and with a few other pieces, people want to get through some of, large cap tech earnings, right? And see like what is CapEx spend going to be like with some of these pieces that people think that there might be some slow markets, some choppy markets to start out the year. And then you'll get to the point where Jerome Powell will get replaced and there'll probably be a lot of pressure from the president on the Fed to do certain things that may lead to gains in the market. So that's what I've been hearing. People expect a slower start to the year with the pickup once there is a new Fed in place, but they also do want to see, as we go through large cap tech earnings, how do those reflect? Are we seeing, raise and beats like we saw consistently throughout last year? How much is AI mentioned within here? How much more efficient can people get? So that's what a lot of what I've been seeing, I would say recently. I love Jeff's thoughts on the small cap market. It's super interesting when you talk, from experience about, hey, when we see that real run, that's typically towards the end of a bull market. I don't know if a lot of retail investors are necessarily thinking that. A lot of them are maybe saying, hey, I see opportunities more here and there, right? I can get it on the next Robinhood, the next Palantir, which aren't small caps, but they went from, 5-10 billion to 100 billion in not too long of a time period, just a couple of years. And so I think that's where people are looking kind of in that small mid cap space. I would see a lot of people are starting to pay a lot more attention.
Great. I appreciate hearing that, because I know a couple of our other speakers. I had Aaron Gibbs and Kenny Polcari on the podcast the other day. They were talking about rotation into SMIDs, to use the Wall Street jargon. Like that's where people seem to be looking for opportunity. I mean, it's great to make money on the Mag 7. People have been doing it for years, but I think sometimes, especially when the calendar flips, you're just looking for new ideas, new places to put money to work. So.
Yeah, exactly.
Or I want to go to you. I mean, obviously you have very active, back and forth with a lot of the traders that are following you guys and what you and Andrew do and so on. So what are some of the conversations like in this market? I mean, are you hearing a lot of the same things where people are wanting to trade the kinds of things that Gav mentioned? Are people navigating this fairly well, or, how are those conversations going?
So retail day trading is kind of shifting a little bit, I think, in the way it's approached. You're seeing a lot of like kind of older school methodology starting to like creep its way back in. And some of these reasons why is because the algorithms that are being used have become so good at manipulating retail traders, right? They go just a little too high, they go just a little bit too low, and run stops a lot, and these things happen. So retail traders, for the most part in our community, tend to stick fairly with the Mag 7. They're generically looking at high, stocks with a large cap. You know what I mean? That has lots of liquidity, lots of volume, and a relatively large daily ATR. You know what I mean? If we can find premium and we sell it, do we have an expectation we can move, like on a, Tesla gets popular here because it moves a lot. And it also carries a $14 to $15 ATR, which is quite reasonable for a stock that trades at its price in the mid 400s. Right. So, and also these tickers have very obvious order books. Right. So a lot of us utilize visual order books or level 2 so that we could actually read whether or not the market is distributing at the time or accumulating at the time. So, for instance, since tariff talks started a couple of days ago, every order book in the index is flipped bearish. Right. We had nothing but orders underneath us, which means we were intending to distribute, which is what we did. We could see after hours, especially, quite an aggressive amount of bid to the downside, which on high caps shows generic intention. So this is kind of why I was, kind of backing even some of what Carley was saying at the beginning, which is I see a lot of movement away from large orders down there, and we're doing it on very low volume. That tends not to be a healthy thing. You know what I mean? We should be fulfilling large requests. We're transactionally incentivized in this market. We're an ATM, right? We make money by performing transactions. So if we're running away from transactions, something's wrong.
Got it. Okay. Carley, I want to pivot back to you because you did briefly bring up the energy markets. I mean, it seems like crude oil has just been sort of sitting there gradually, falling gradually and not doing much on up days, whereas obviously you have crazy action like we had in natural gas this week. Thoughts on the big picture in the energy markets? I mean, is this going to be a market that just continues to be a snooze fest, or are there things in energy like crude oil that might be an opportunity to turn this thing?
I hear a lot of chatter and read a lot of comment boards, and there's a lot of people looking for a bottom in crude oil. And the main argument is, obviously geopolitical tensions and all the chaos going on in the world, as well as the fact that if you look at the COT report, which is Commitment to Traders report, it tells us who's long, who's short, and by how much. Speculators have dwindled their long position down to about the lowest we've maybe seen in a couple decades, maybe even ever. So there's a lot of reasons to think crude oil might go up, but I would caution that idea just simply because, we've been in a bear market since 2022, and I think we're going to continue to be in that sell the rallies type of habit until we see some sort of capitulation low. And the reason I say that is this is the fourth bear market in the last 20 something years, and the first three didn't end quietly with a polite bottom. It was more of a sell-off to such a magnitude nobody ever wanted to buy crude oil futures ever again. Yeah. For example, in 2020, everyone infamously remembers when crude oil went negative on front month
getting
contract.
Paid, right? We're getting paid to buy. Let's go.
Yeah, exactly. So, and then the two prior events, like right after the financial crisis, we bottomed in the low $30 a barrel. In 2016 bear market, somewhere around 26 was the bottom. So if you actually chart out all the bottoms of the last three bear markets, this being the fourth, if we keep following this pattern, the bottom could be somewhere under $20, maybe even $15. I'm not calling for that. I'm not saying short crude oil here and just wait for $15, but I think it's a good idea to buy some put options. We've been buying June and December puts really cheap just in case the rug falls, because the last 3 cycles, we had a rug pull. I don't know
Yeah.
what it's going to be. It's probably something we don't even know yet that causes this, but it's not impossible. And if you're looking for the opposite to happen, 65 is kind of the pivot area. Above 65, crude oil starts to redeem itself and might regain traction. But as long as we hold 65, look for lower prices overall.
Gav, one thing we haven't talked about yet is crypto. I was hoping to get one of our crypto speakers on, but there's a scheduling conflict, so she couldn't join us. It's interesting when I hear retail is really interested in what's going on in metals and talking about that. It seemed like a year and a half ago, nobody wanted to talk about real gold. It was digital gold, and that was what was in front of everybody's face all the time. So any thoughts on that? Is that market still generating interest? Any thoughts on where you think things are headed there?
Well, it certainly hasn't moved together with gold. So definitely not doing the same thing there. And I think that, probably one of the biggest differences in that area is what do countries actually use as a reserve currency, right? And you can look at countries around the world and they are certainly stacking gold, right? They're less interested in US dollars than they used to be. I wouldn't say that countries around the world are exactly creating, stockpiles of Bitcoin the way that they are with gold and other metals. And I think that that's one piece to look at there. But it still intrigues me. I think that you got past over the last couple of years a lot of the areas in terms of regulation, right? ETFs coming out, a lot of those other pieces. Like you're past a lot of those areas, and so my hope for Bitcoin is that it can, in some way, shape, or form, gain some type of stability, right, from those, and just having more constant flows, institutional adoption, pieces like that. You have a lot of financial advisors that are now much more comfortable utilizing it. I have Bitcoin, in my long-term portfolios personally. And so I think that, at this moment, people are probably putting 1%, right, into Bitcoin in that area. And I don't think that that's a terrible thing. I think that I struggle, beyond Bitcoin and Ethereum with a lot of the others that are out there. It's a lot tougher to see that continuous upside. But for me, I wrote a piece to some subscribers that I have on one platform earlier, but essentially I was saying, I think that the crazy outsized moves, 10x moves, we're probably past that just because of how much institutional adoption we've had. My hope for Bitcoin is that it can move in a way similar to a gold or an S&P or things like that, gain some of that stability and be used in those ways. So that's where I'm looking. But I do think that there's still, work to be done because just looking at the chart, it's basically flat over the past year. Gold in that time period is up 70, 80%. So they're definitely not moving in tandem.
Jeff, anything you want to add to that? I know you've periodically had recommendations or cyclical work on both crypto and on gold. So I figured that's a great topic for you as well.
Yeah, I'd like to comment on Bitcoin, copper, and energy. As you know, we have a seasonal foundation overlay. A lot of the swing trading that I think Thor was referring to, we generate that from our seasonal overlays. Bitcoin performed horribly seasonally. We stopped out of, I'm an ETF guy we did the commodity almanac, and we have commodity seasonals that we overlay with ETFs and as well as the stock seasonals. But so I traded that a couple of years ago. This time got burned. We're out. Recently it's below our stop again. Midterm election years, horrible for Bitcoin. All three of them that they've had since they went out there. I think the institutional comment that Gav made is important because I don't really track the patterns until we get the first full year after the CME futures began trading, which is 2018. So Bitcoin is on my what list for performing horribly during its seasonal period. When seasonality doesn't happen, it's an indicator. So that would be a negative one. I wanted to ask my friends on the panel with me here about copper. You guys were mentioning a little bit. We got into our copper trade end of October, anticipating the seasonal low in December. Going to be a little bit of luck involved with the seasonals and the big macro trend of copper and the build outs of the data centers. I picked up the CopX personally. I like the miners. It's done quite well. I think my position's up about 30 or something percent since we got there. And then energy, seasonal low in oil around December. Also gas. We had that pop with the weather scare, sort of December to February. But on the stock sector side, the XLE and the XES were a couple of pickups. We put those out in early December. Again, trying to not confidently. We're still concerned, like Carley was mentioning about, President Trump's really trying to keep energy down, and he's going into other places to make him ship it, whatever. We don't want to get into too much politics here, but the XLE and XCS trade from early December, we hit our buy limits. We're happy with those. I'm up a little bit. I own both of those, full disclosure. So seasonal overlay, technical setup, a little macro trend, and some, risk management with stops and buy limits pays off.
Got it. I would add two things. I think, if I remember correctly, I looked at the stats. XLE, I think, was actually up, 8% or so last year, or in the last 12 months, even though crude oil was down 19, 20%. So you had that divergence there. And if it makes you feel any better about Bitcoin, I actually wrote a column the other day. I said, is Bitcoin back? I said I didn't want to jinx it. And then here we are, $6,000 lower since that was published. So mea culpa on that one as well.
We tried a couple times to get into it. It didn't work this year.
There you go.
That's really great. I can never do copper. You were mentioning copper is a horrible day trading commodity. It only moves after hours for me. I would be sleeping. It's like, I think it's when the Asian markets are open, I think is when copper's moving. So it just never works for me every time I've looked at it, but what are you going to do?
Got it. Hey, there's some things that, just go on your no trade list if it gets to that, right?
If you ever pull up a chart on it, just look at its movement after hours versus its movement during the U.S. market hour. It's horrible mover during the daytime.
Danielle, I got to pivot to you because you did share a couple names in the equities world that you're looking at, and you talked briefly about earnings. Can you share a little bit more about what you're expecting out of this Q1 season, and maybe sectors or reiterate a name or two that you think looks interesting here?
I feel like going into earnings this quarter, it's just a little bit more of a stock picker's market. I mean, normally it's relatively simple for me to trade the Mag 7 higher going into earnings, but that pattern has shifted. And so now I'm looking for more unique names. I don't usually trade XLE stocks because they just don't trend very well. But I mean, I have been trading some more of the new energy names. A new one that I got into was SEI today. That one has high short float. Some traders in our trading room found that one. OKLO, that one had some more volume coming into it. We have SMR as well, more of these AI energy names. But I mean, I've really just been focusing on tickers that are within 10% of the previous highs that have 20% short float or more. And they're still in a trend. They still have high volume coming into them. They have earnings coming up, and they've had these big moves surrounding earnings. And so, I mean, for me, that's really what's been working the best. I feel like we're in a really interesting juncture right here because we're at this point where Netflix has now reported earnings, and, it fell immediately after the report. It was already in a bad downtrend. Meta got creamed after earnings last quarter. So that's why I've been shorting Meta this week. I already took my profits on that. I had shorted Oracle because Oracle fell quite a bit after earnings last quarter. And so I shorted that last week, and then I went ahead and covered that as well. And so it's really interesting because these kinds of shorts before earnings, I mean, I really haven't done since, really 2022 was when we're looking for that kind of pattern. So I agree with Jeff again, where it gives a little bit of 2022 vibes. But I think we're going to know a lot more about the direction of the market this year after we can get through the Mag 7 earnings. But in general, we really need at least 4 of them to do well and trade higher after earnings. It's not like only Google can hold up the NASDAQ by itself.
It's interesting that you mentioned after the Mag 7 earnings, because looking at the historical chart of the midterm election year, which is what 2022 was, as there was those, the weak spot of the 4-year cycle is Q2 and Q3 on the midterm year. So whether it's super negative or flat, that's, kind of runs in with the first quarter earnings season. And then you heat up the election campaigning and mudslinging, and everyone gets a bit distracted from the markets and the economy and starts looking at, campaigns and congressional margins and such.
Interesting. Okay. I mean, that definitely overlaps with my timeline as well, because even in strong years, I mean, January is historically one of my favorite months to trade. I mean, I really like to trade a lot of those tax loss candidates that, people are selling them at the end of the year and then they buy them. And I feel like that happened really well this year. And I feel like generally, people are putting money into the markets the beginning of the year and looking for those pre-earnings runs. But I mean, pretty much always February and March.
Are you writing the piece on why the January barometer works?
Well, because of you.
Well, that's why it exists. So all these decisions are made that you're talking
Collaboration.
about.
I love it.
It's part of it.
We've
got a few stocks out there too. There was one little energy stock that we came out with, the equipment one, ARCHROCK, AROC.
Mm-hmm.
One I own. It's up a little bit from our fall recommendation. And then what's bouncing today big for us is Rambus, which we got into on a dip. So I don't know, a couple things happening out there, not Mag 7 and not just spreading out, but still some tech and some energy stuff. So anyway.
Danielle, I want to keep it with you because obviously, again, I'll just mention it. If you're joining us, we are having the Money Show Traders Expo Las Vegas, February 23rd to 25th. You're going to hear from each of these speakers there. They're going to be talking about tactics. They're going to be talking about sectors. They're going to be talking about attractive asset classes, a little bit of everything you need to know. The link is there on the screen, so thanks for sharing that, Gav. But Danielle, the reason I bring that up is because your topic, and I know we have to provide these a long time in advance, is going to be master the 5-star setup, power up your options trading. So I wanted to get, you shared some thoughts on which types of names you're looking at. Talk a little bit about your methodology. How do you use options? What kinds of options strategies do you use to trade these moves? And what are you going to be talking about in Vegas?
So, I like to look for a confluence of 5 factors when I'm getting into a trade. I'm running the trade room during the day and I'm asking questions to the left and right, same thing in the media. Look at this ticker, look at that ticker. And people always have a reason why.
I'm having a little bit of trouble hearing her. Can you hear her well?
Yeah, your volume.
Okay. Sorry, yeah. Your voice faded out a little bit, but you're good now.
Oh, good. So I get so many requests and a lot of questions about different tickers, right? And I always tell people, hey, you know what? If you know more about that stock than I do, that's great. You have some sort of personal reason why you like it. I'm not going to tell you don't buy it. Do whatever you want with your own money. But for me, whenever I look at a ticker, I want to have at least 5 reasons why I think it's a good ticker to buy for an investment or to trade it, because having 1 or 2 reasons, it just doesn't really make it that strong of a bet, right? So overall, what I'm generally looking for is I want to see a long-term trend. I don't like trading tickers that are all over the place. It is significantly easier to jump on and ride a trend than it is to trade a chart that's all over the place. Maybe you'll get it right, but I don't want to deal with it. So I like the trend. Then I also like stocks that are pulled back and consolidating in the context of the trend, because when they pull back and they consolidate, that's before they take off. And that also gives you the entry point where you have that edge. So I'm looking for that pullback, that consolidation. I will break that rule sometimes when it's short squeezes that are making a new high, and I'll make an exception for that reason, because with a short squeeze, when a ticker is making a new high, that's when the short sellers are covering, right? So it can continue going higher, but I'll admit the entry isn't the best. Anyway, so I'm looking for those factors. And then I'm also looking for relative strength. I always want to look for something that's up a little bit more than the market, like Livinade, again, was a great example from today. It was up more than the market was up. And then I'm looking for the earnings setup that I already mentioned. I like to time entry points either before or after earnings when I have a ticker that historically does well during that time frame. And then the last piece of that is really just the fundamental piece. I mean, is this something that's hot right now? Is this an AI infrastructure name? Is this a robotics name? Is it a semiconductor name? I mean, it doesn't really matter. It's whatever's hot changes all the time, right? So I like to trade what is hot in the moment, because that's where I get that volatility. So that's the framework that I always use to apply whenever I get questions on specific tickers. And that's what I use to determine, okay, am I going to do an options trade? I mean, the options trades just depend. Sometimes I buy long calls. I do a lot of butterflies. People call me the butterfly queen. But mainly long calls, long puts, butterflies. I'll do debit spreads sometimes, not really very often, because if it's a good ticker for a butterfly, there's just no reason for me to do a vertical spread because it's going to cost me twice the amount. So
Yeah.
I would rather, if I'm going to do a spread, I'm going to do a butterfly, not a vertical spread. But then I use a lot of long calls and puts when I think it's going to be a really big move.
You did actually have a question pop up while you were talking in the chat. It was from a person, Lonnie Smith, that said, how wide of a spread is too wide? I don't know if you want to weigh in on anything, any thoughts on that?
Sure. So that all just depends on the options chain and on the ticker. Basically, what I do is I use Fibonacci, and then I just identify a price target. And then I go into the options chain, and let's say that the price target is $20 higher than where the stock is right now. You just want to go through your options chain and see when is it reasonable that this ticker could be at that price. And so that is how I determine the width of the spread. So it's going to be different on each ticker. If, for example, you're looking at a ticker where you have a price target that's $50 higher, that's when the spread is going to need to be wider, because the entire point of the spread is that you want to capture that move. So you have to be able to identify your entry point, and then the strike, the upper strike in the spread has to be where your price target is. So if it's $5 higher, your spread would be $5 wide. If it's $15 higher, your spread would be $15 wide. And then as far as the timing and the options market is concerned, I want to overlap that with what the market makers are pricing in for that expected move. Because if the market makers are saying, you know, this stock will be $20 higher next week, you don't want to use a price target that is $50 higher for next week, because it's extremely unlikely that you're going to be able to get that price target in that time frame. So that's why you have to overlap those factors.
Okay, got it. And Jeff, you did already kind of address this earlier, but I'm gonna bring it up because there was a question earlier from J Dubs, or a comment really talking about market breadth is great, growth and advancement expanding outside Mag 7 is very healthy, and more sectors are participating. But you kind of pointed out sometimes it's late in the cycle when you see small caps moving. So any thoughts you'd add on that?
I mean, the breadth is great. I mean, you want to see an increasing number of new highs, decreasing number of new lows. You want to see more advancers and decliners. You want to see spreading out. But the comment about getting late in the cycle is for small caps, and small caps specifically. That's when you start to get towards the end of the bull move. It could be, I mean, we've been in what, arguably a 3-year bull market since October 22. We're talking about, you know, getting towards the latter part of that cyclical bull, which may or may not go on for another year or so, but it just starts to make you wonder. I was wondering if Carley had a comment about copper, because I wanted to ask that earlier on, and she's been sitting there quietly for a while, and I just
Collecting her thoughts.
Right. So
and some of the technical stuff too. You're the resident technician of this group, as far as I know.
Well, historically, copper's a market that has kind of spectacular rallies and then pitiful declines, and we see it over and over and over again. And we're starting to get up to the top range of where copper starts to run out of steam. We've seen some really big breaks from these areas. I think what's holding copper up is just what's going on in gold and silver. You know, someone else in this panel mentioned retail traders have decided the metals are the place to be, and so they're just putting money there, and it's holding some of this stuff up. Maybe beyond fundamentals, you know, we'll have to see once the water washes out. But I caution people. I'm not necessarily a copper bear. I just think these prices aren't very attractive for anybody that's has a time horizon less than multiple years, because we've seen some really treacherous pullbacks from this general area. But everybody's kind of jumped on the bandwagon that the US dollar is not worth the money it's printed on. There's the debasement trade and all these basic assumptions that we shouldn't be holding cash in the dollar or treasuries or anything of that sort. But I'm wondering if that's how 2026 is actually going to play out. Because if there is some sort of rough turmoil that comes along in the financial markets, the first place most people go is the dollar. I know that's not how it worked last time, but I suspect maybe it'll be a little different this year than last year, because the US dollar is sitting on pretty good trendline support that dates back over a decade. And the sentiment is in the toilet. If you look at some of the sentiment indicators, there's only I can't remember the exact amount, but it was a pretty good sample of industry insiders. Only 23 to 24% were bullish the dollar. And that tells me that everybody's positioned on one side of the boat, which is not necessarily be short the dollar or short treasuries, but don't be, don't have long exposure there. And they're putting their money everywhere else. And so what you mentioned about the small caps kind of tells me people are looking for places to put their money other than cash. And sometimes when everybody has the same idea, it's not necessarily the best idea. It was just 5 years ago in 2020 when everyone in the world wanted to buy treasuries at almost zero yield. And now we're at the exact opposite end of that cycle. So you have to just kind of wonder if what we're seeing today is going to be with the same, it's going to carry forward, or we're going to get a complete flip like we did in 2020. And I think the latter is probably going to be the case. I just wish I knew when.
Got it. Thanks, Carly.
We all want to know that.
Yeah, right. Thor, I actually want to go to you because, again, we've talked about different trends and different time frames. And your Vegas topic is my journey to becoming a day trader. And you're going to be talking about some of the things that you learned in that own journey. Share a couple of points here. Somebody comes to see you talk in Vegas, don't give away the store, I guess, but just let them know a little bit about what they're going to get out of that.
Well, I mean, certainly to be a day trader, something first is finding a systematic approach that works for you in the market, right? One thing I enjoyed about hearing Danielle speak was that she trades exactly the opposite way I trade, right? So everything about what she's doing is the opposite of what I do. I'm a range trader. I like doing the over and over and over again, not mining me until it doesn't. And she's basically hunting me until it doesn't at all times. Right. And then she's going to use options to hedge that out. That's very complicated. It sounds like something an incredibly intelligent person would do. I certainly would not be one of those people. I barely, you were saying options. I probably got a little blank for a second. I actually did IT support for an options trading platform. Still not that good at options. But I mean, it's an amazing way. I mean, options are a great way to get into the market for a very low cost of entry, and you can get great reward out of them. But you gotta be really smart. So basically I kind of leaned more into finding a systematic approach. So like I actually have a Camarillo based pivot system that I utilize. It's what my book was based on, and based on range and as well as volume metrics, I created more or less a volume weighted tick, right? That can read the amount of force that's being put in to move the price. Right. So I can tell when we're distributing or accumulating as the price is moving on the fly utilizing this. So when we get near range edges, I play against the edge back into the middle. Or if we're breaking from the edges, I then play out. But it's all range based. So and my system runs off of my cell phone. It sends me a text message and it says, hey, it's time to take a play. It tells me exactly what the play is, how the play is supposed to go, what my profit targets are, where I should go for. And I just got to go in there and hit a button and it's done. It took me 10 years of a ton of research and, a programmer and figuring all that out. But when it comes down to it, I've moved towards trying to create like an ultimate simplicity. And the main reason is I became a day trader because my daughter was diagnosed with nonverbal autism. So I needed to be able to make money, but I needed to be a stay-at-home dad also. Right. So I needed to, like right now I'm at home, my daughter's with her therapist in the other room. Right. So so I needed to be available and I needed to be able to put something on. I didn't have time to crush fundamentals, although I understand it's better. I didn't have time to crush through like I can just read price action and then just take things based on that. But the stuff that we use to make our calculations for the cams are 1000% affected by the stuff Jeff's talking about. Right. These seasonal rotations, they create the values that my system mines to get its ranges and all of these things. So without what he's talking about, my stuff just doesn't happen. But yeah, man, I can't. I actually have Stock Traders Almanac, and I really enjoyed reading through that. But it's been a titch since I've hit it. I'm getting it back out now, and I'm going to bring my copy to Vegas. Because I actually really did enjoy that read. And so when I heard Jeff talking, I was kind of like, oh, this is kind of fun. So I really appreciate that. And I really, really like some of the things Carly was saying about with metal pricing and those things like that. I really think if there's anything out of this whole get together, maybe anyone who's thinking actionable should really be paying attention to. I don't know if that's where she's located on everyone's Chiron, but
you got it, man.
I would be listening to that right there. That was some very sage advice on metals and especially with retail. We just chase volume and movement. You know what I mean? So right now, metals are what, Carl? I mean, they're moving more in like a few days than they were moving in like months or years, even like silver. Like what the heck is going on with silver? Like it's crazy. But anyway, yeah, thanks.
Yeah, I hear you. I mean, it's hard to believe you're closing in on $100 silver and $5,000 gold. I don't know. Wow. I'm old enough to remember when gold was trading for $4,000.
Yeah.
I do
Jeff,
remember
go
day
to you
trading
because-
PLTR at like $12 or $13 now, Danielle,
There you
wishing
go.
I had just kept some of it.
Jeff, one topic, I mean, you have a couple different things you're doing in Vegas, but one topic I think I've got on here, AI tech, super boom, hot stocks, and seasonal sector trades. Again, without giving away the store, you know, what else do you think seasonally we're going to be there next month? Your work suggests might be something to look at. If you were to give
Did I
away
get
a
all the
little
right
bit
hashtags in that title?
What's that?
Did I get all the right hashtags in that title?
I mean, I was going to say there's a lot of SEO terms or whatever you got going on there.
We were adding that in. Well, you know, I did a book called The Super Boom back in 2011. Came out of a forecast we made based upon the long-term cycles that my father discovered back in the 70s for these 500% moves in the stock market following war and inflation. And there's another aspect to this super boom equation. It's called what I call a culturally enabling paradigm shifting technology.
Whoa.
Disrupting technology. I think AI is it. Things that change the world collectively and our lives individually, you know, like indoor plumbing, the combustion engine, air conditioning, refrigeration, the interstate highway, you know, cars, the microprocessor. So I think AI is part of that, big part of it. It's a whole stack. And we're looking at stocks that are and sectors that are part of that, as well as some seasonal setups. Last year, you know, utilities, the seasonal trade from March through October dovetailed with the whole AI boom as well. So, you know, I'll wait till we get closer, a few weeks away. We'll see what's setting up well with the seasonals. But, you know, kind of like the early entry into the copper trade and the energy trade that I mentioned. And we were in gold last summer ahead of the fourth quarter gold trade. Got out of it. The miners with a 20+% gain hit our, you know, targets. GLD we got out of, you know, around a little under 400, but you know, we already had our gains. I mean, it's again, I think it's a little pricey, but we'll be looking at the setups, what's going on in the macro channel. When we pick stocks, you know, we have a bit of a system as well. We're looking for stocks that are exhibiting an acceleration of growth in revenues and earnings sequentially year over year. Low valuations, technically set up, off Wall Street's radar. So we'll share some of those. There might be some ones that are already on our list that are still doing well, like Rambus and a couple of other ones I mentioned there. So that's what I'll be looking. I'll also be doing a talk on the whole outlook for 26 with the midterm election year, 6th year of the presidency, the seasonals, and the January barometer, and the trifecta, and the whole kit and caboodle.
Perfect. Well, you know, we are coming up against the end of the hour here, so I guess I do want to sum things up and just say, as I mentioned earlier, if you caught what Carley had to say, if you were listening to what Thor had to say about day trading, Danielle on options, and Jeff on seasonality and some of these other seasonal trades that can work for you, it just kind of gives you a taste of what you're going to get at the 26 Money Show Traders Expo event. We have 4 people here that are speaking there, but you're going to see dozens and dozens more. They're going to be specialists in tech. There's going to be specialists on the economy. There's going to be specialists in day swing trading, options trading, futures trading, you name it. So I like to think, you know, and appropriately enough, because it's in Las Vegas, I like to think you're going to get kind of a buffet approach to education about how to trade and invest in the markets. So we are February 23rd to 25th. We're at the Paris, Las Vegas again. Also, like I mentioned at the outset, we do have the pre-show event on Sunday. If you're going to be in town earlier, and who doesn't want to be in Vegas for an extra day or two in the front end or the back end of a conference, you're going to be able to hear about what's going on in AI and tech, as well as digital assets and crypto. So love to see you guys there. If you've been to a Money Show before, nice to see you again. If you haven't, love to see you for a first time. LasVegasMoneyShow.com, or again, you've got the full link in the chat from Gav. And if you don't catch what Gav does on Wolf Financial regularly, you have to do that. Fantastic work. Really does put you in touch with what a lot of traders and investors are seeing in the markets throughout the day. So you get some great education. Again, you know, you got your computer, you got your setup in front of you. You want to know what's going on from open to close. A lot of great information there. So thank you for partnering with us on this. Thank you for attending, and hope to see you all in Vegas.
Yeah, my pleasure. Thanks so much, Mike, everybody. Jeff, I know you're already regularly on our shows, but we'd love to have the rest of the crew joining us as well. Like Mike said, we're running from morning to close. Anytime the market is open, we have a live show going every single day. So thank you, everyone who tuned in. I saw over 4,000 on the Wolf Twitter. I'm sure other people linked theirs as well. Appreciate that. Appreciate the chat for engaging with us. Looking forward to everybody having a great experience in Vegas.